Hi, good morning. So now let's start with the first chapter of CA Final Direct Taxes and International Taxation is Income Tax Basic Concepts. So today we'll just focus on the basic part. Most of you might have already done this in your intermediate, but still we need to refresh it because intermediate was many years back. So now for levying any tax, now what do you mean by levy? So I am levying tax. So generally I won't levy tax, government will levy tax. Means government will charge tax. But government cannot decide on its own that okay, from tomorrow we are going to charge this tax. No. There should be some legal backing to that. And that legal backing, which is the most important document for India, it's not any religion textbook. It's not neither of the religious textbooks nor any rule book. So the most important document for India is the Constitution of India. In your school, you might have done that pledge. So that pledge is also part of Constitution of India. So Constitution of India should authorize the government to collect taxes. Okay. So that to give powers to government. Who should give powers to the government? Constitution of India. So that power, those powers are given under three lists. The Constitution of India, we have lists. So first is Union list, State list, and concurrent list. So Union list, State list, and concurrent list. What is Union list? So all those matters which are in Union list, it will be dealt with by central government. State list, all the matters which are in state list will be dealt with by state government. And concurrent list, it means both central and state government. So for example, security of India is given in concurrent list, which means central government is also responsible for security of India and state government is also responsible. Police is given the state list. So police are in state list, which means that those police are in under the control of state government. What about income tax? Okay, this list to the constitution, this is only not restricted to taxes. It will be for other matters also. Like for example, health. So taking care of health of the people is in state list, which means which government is responsible? State government is responsible. Like that, different matters are there. If you want, you after the class you can just Google that union list to the constitution, state list to the constitution. What are different matters? So income tax is given where? So entry 82 of union list, that is list 1 of 7th schedule to article 246 of the Constitution of India, has given power to central government to levy taxes of income other than agriculture income. So here the power is given to union government, which means central government. So which government collects this income tax? It is by the central government. In GST we have half of it goes to the central government, half to the state government. But here income tax is collected by central government. And what it will do with that? Obviously government has a lot of expenses. They have to take care of people. They will provide ration and all to the people, food to poor people, then for infrastructure development, lot of different things are there. So taxes are for generating revenue. Now many a times we are going to use the word in the interest of revenue, in the interest of department. Means what? In the interest of means for the benefit of income tax department. When we say interest of revenue, for the benefit of department. Okay, so what is the first thing which we have studied today? That income tax is collected by central government, whereas GST is collected by both central and state government, half of. Okay, then for any now if that particular thing is given in the constitution, okay, income tax, then central government directly cannot start charging income tax. There should be some act for it. So that act is Income Tax Act. Income Tax Act 1961. It came into force with effect from 1st April 1962. So in 1961 it was passed. And yes, I missed out this. So power to levy taxes on income other than agriculture income. So on agriculture income there is no income tax. We have section 10(1). But you will say that there are a lot of rich farmers. So those rich farmers also are not paying tax on income which is earned from agriculture activities. But there is a way out, that even agriculture income is being taxed indirectly. So how it is taxed, we are going to study in taxation of entities chapter. There is a concept called as partial integration scheme. So to the rich farmer this provision applies. So effectively it is being taxed, but on paper it is 10(1) exemption. Exempt means what? If a particular income is exempt, which means it is normally taxable, but due to exemption it is exempt, which means I am not paying tax on that. So exempt, when I am using the word exempt, it means no tax is payable on it. Okay. So the background, the body of income tax law is, we are going to study Income Tax Act 1961. Now in Income Tax Act it will be given that you have to file your return. Yes, what exactly is this return? And return has two words, huh? So return and return. So income tax return means what? This. Now I am earning income, so I have to pay tax. So will officer every time tell me that you pay this much tax? No, I have to calculate on my own. That is called as self-assessment. Assessing means calculating it on your own, and self-assessment means I am doing it on my own. So I'll be doing that calculation. And how the department will come to know that this is the amount of tax, this is the income which I have earned, this is the exemption I have claimed? For that I have to tell to the department. How will I tell to the department? By way of filing return. So this income tax return is to be filed, and this income tax return is only once in a year. In GST we have that concept of quarterly, monthly. Here it is simple. Whatever is the income earned during the year, you have to file only one income tax return. Okay, so in the act it would be given, in Income Tax Act would be given that you have to file the income tax return. How to file it means which form, what annexure, what is the different information it has to be given. That is the procedural part. That would be given in the rules. Income Tax Act, Income Tax Rules 1962. So what is the difference between Act and rules? Act will specify the provision that yes, this procedure has to be complied with. I'll give one more example. So Income Tax Act will say that you have to get registration under income tax, which means PAN. Now like GST registration, there is a separate chapter on registration. You have to do this, that. In income tax we don't have that. In income tax, if you want to register under income tax, you have to just go to that PAN center and you have to get PAN, or nowadays you can do it online also. So that PAN, permanent account number, is the number. So in Income Tax Act it will be given that you have to get PAN, and in income tax rules it will be given that which form you have to file, which documents you have to attach. Then the details to be given in the form, that will be given in the income tax rules. So Income Tax Act specifies the provisions that the we can say the theoretical part or the legal part, and income tax rules specify how the act has to be implemented, the procedural part. Now this Income Tax Act was passed in 1961. Do you think that whatever was in 1961 still same provisions are there? No, every year there are changes made. So how these changes are made? So as a CA student you might be already aware that every year there is a budget. Now budget is what? Budget is where for the next year, whatever is the next year, what are the different incomes, expenses that entire statement is put forth by the finance minister. So that finance minister presents this budget in Lok Sabha generally on 1st February. So if it is presented on 1st February 2021, then it will be applicable from 1/4/21. So whatever are the provisions or the changes made to the act year, so are applicable. So if it is presented in February, so February it will be discussed in the parliament, and then there is a procedure, and then from 1st April those provisions would apply. Okay, so what is this budget? So this budget has different parts. So this budget gives details of the incomes and expenditure. What are the estimated incomes of government and the expenses? Now generally, let's say you want to purchase something. As a we can say middle class person, how we do the purchases? I estimate that okay, this much is my income. These are my, for example, my income is 40,000 rupees. Every month I am earning that. My monthly expenses are, let's say, 20,000, 25,000, including everything. So I have 15,000 with me, which is then out of 15,000 I pay my some premium is there, some EMI is there, and I have 5,000. So if I want to purchase something, like I want to purchase a car, then if my EMI, I hope you know EMI is up to 5,000, then I can purchase. Otherwise I'll purchase a normal scooter. So generally what we do, we first find out how much is the disposable income we have, means how much income we have left out after expenses, and then we find out the expenses, that yes, out of that I can pay 5,000, and then on EMI I can purchase that. In case of government it is ulta. Government lists down all the expenses, that we want this different schemes, for this scheme we want this much, for this scheme and all. So expenses are first quantified, and to satisfy those expenses, how much loan can be taken, and after all the reductions, so how much taxes have to be collected. So those taxes collected, if are means that we require more taxes, then the taxes are increased. Okay, so it is reverse way. So in that finance, in the budget speech, all these things are discussed, and plus there are tax related proposals also. So whatever changes are to be made to Income Tax Act are also discussed, plus to GST Act and other acts also are discussed. So whatever is presented in the parliament is called as a finance bill. Now you know that there are two types of houses of parliament, Lok Sabha and Rajya Sabha. So both the houses of parliament have to agree, then only that bill is passed. So passing, if you have seen any parliamentary session, nowadays only the opposition people are just shouting now, but still the bills are passed. They'll say how many are saying yes, ayes and noes. So yeah, ayes means yes to that proposal and no means no. So it's called as voting for the bill. So both the houses have to pass. But here in case of finance bill, it is a money bill. It's a type of bill called as money bill, which will be passed only in Lok Sabha. Lok Sabha means when we elect people, when we as a voter elect people, they go in Lok Sabha. When we elect MPs, they go in Lok Sabha. Whereas the state governments, they will nominate certain people, those will go into the Rajya Sabha. So Lok Sabha is called as a lower house and Rajya Sabha is called as upper house. So finance bill has to be passed only in that Lok Sabha, and after passing from there, it will go to the president. President will sign it, and that will become Finance Act. So this takes time. So it is presented in the parliament in Lok Sabha when on 1st February. Then 2 months time is there. Obviously that in the month of February itself, it is passed in Lok Sabha, and then in March it goes to the president, and then president says that okay, we are agreeing. And anyways, in India, president doesn't have much powers. President is like an ornamental post. So that person will just sign it. Obviously he has the power to reject, but generally it is never rejected by the president, and once it is signed, the finance bill becomes finance act. So now it might be possible that there is section, for example this hypothetical 172. So 172 section was inserted in 1962. Now every section has subsections and clauses. So how? I just show you. Subsection, I think for here it is not there, but clauses are there. Like for example this section 231. Yeah, correct. So section 2 is the section, into bracket 31 is the subsection, and this A, B, C, D are the clauses. Okay, so in 1962, for example, I will take example of this A, B, C, D, E. Okay, E was there, F and G was not there. Okay, so A, B, C, D, E was there. Then in the subsequent finance acts this was added, and maybe there was one more which was deleted by the subsequent finance acts. So which one we are going to study? We are going to study the latest provisions. Okay, so see this, if this is act, then some amendment is added, something is reduced. So whatever is the latest one, that would be done. I'll give you another example. Let's say you are baking some cake. Okay, so cake is baked in 1962, for example. Then in 1980 you have taken out the first layer. So if you are giving exam in the year 1980, then that cake without layer you will be studying, if that is income tax act. Then maybe in 2000 whatever, whenever is your exam applicable, that time some cream is added on that, so you will study that cream without the topping, but that cake without topping but with cream. So whatever is the latest updated provision, that we are going to study, and how that changes, those changes are made in the act and rules, those are made by finance act. So finance bill is presented in Lok Sabha, then once it is passed in Lok Sabha, it goes to the president, that president will give his assent, will sign, and then it will become finance act. So finance act makes changes. So those students or those people who keep on jumping that okay, today's budget this change is made, so that change is made as per finance bill, that is not final, that bill becomes act. So when the bill is presented, they will discuss in the parliament, there can be changes to that. And the recent trend is, every time whatever finance bill is presented on 1st July, sorry 1st this February, and whatever is the final bill passed, there are hundreds of changes in that. Yes, and one more thing you have to remember, if you are giving exam in May 22 or November 22, then in February 2022 there will be a budget. You have to see to it that you are not going to listen to this budget, because those changes are not applicable. So this is in February 22, Finance Act 2022 will be, or Finance Bill 2022 would be passed. That is not applicable for your exam. So what you have to do, henceforth, whatever we discuss in class and on our YouTube channel, every exam, before every exam, I keep on posting a lot of things like amendments. I'll post RTP related discussion, mock paper. You refer to only that. Any other information, close your ears, close your ears, close your eyes, because excess information is also not correct. Okay, so just remember, in February 22, some students or some friends might send some information, okay, this has changed, this that has changed, but that is not applicable for our exam. Yes, coming back, then notifications issued by central government. So many a times act and rules give powers to the central government, that you issue notifications. So those notifications are issued by central government. So what can be different types of notifications? Maybe the power is given to central government that you specify which documents are to be required for applying for PAN. So those documents will be, how the central government will say, will a person just stand up, central government officer, and say, okay, these documents are required? No. So for that, there should be some legal procedure. So for that, the government will issue notification, and notifications, act, rules, whatever is any document which is legal document, that will be, and which is issued by government, parliament, that is published in official gazette. Official gazette means it's a, we can say, a repository, means it's a place where all these things are uploaded or they are updated. So once it is this published in official gazette, it's like online only nowadays. So official gazette, you can just Google, and whatever is published there, that becomes final. So when the act will become act will be published in official gazette, when it is passed by the president. Then circulars issued by CBDT. Now highest level authority in income tax is CBDT, that is Central Board of Direct Taxes. Central Board of Direct Taxes. Okay, that is the highest level authority. In GST, who is GST and Customs, we have CBIC, that is Central Board of Indirect Taxes and Customs. Earlier it was called as CBEC, Central Board of Excise and Customs, but now since on most of the commodities we don't have excise, it is CBIC, and this comes under Ministry of Finance. So Ministry of Finance, under that you have this CBIC and CBDT. So for the internal working of income tax department, circulars are issued. Now where we had this concept of circular? In your schools, going back to your school era, if the principal want to declare some holiday, so if you remember that if the principal wants to declare some holiday or the school management wants to declare the holiday, then the peon will come with a small book, some notebook. In that the message will be given, and then the teacher who is present in that class will tell to the students, and she will sign on that. That's the general practice. I don't know what's followed nowadays, but that was a general practice followed when I was in school. Then the teacher will tell in the class, and then she'll sign. So it's a signature that yes, I have told this to the students. I think nowadays it will be all WhatsApp and all, but so that was a type of circular. Or in your colleges, the circulars would be pasted on the whatever some notice board and all. So what are these circulars? So holiday declared by the school, it is for the internal working. So if school has declared holiday, maybe because the some management person has expired, so or he has died, so holiday is declared, that will apply for only that school. It's for the internal working. Similarly, CBDT, whatever circulars are issued by it, will apply for the income tax department only. We'll be studying that. And last is case laws. Now this act is open to interpretation. So many times we can interpret on our own. So I will try to interpret in such a way that my tax payable would be less. Does that mean that I am doing tax chori? No. So there is a difference between tax chori and tax planning. As a tax professional, we have to plan the entire structure in such a way that the taxes are less. How we can do it legally? Maybe if my income is 40,000 per month, so total 4,80,000, plus I am having some 2-3 lakhs rupees other income. So to reduce the tax, I will invest in chapter 60 deductions. So that would be considered as tax planning. So our entire discussion which we are going to do in this class will be that how we can save taxes. Does that mean that we are promoting tax evasion here? No. Tax evasion means, evade means avoid the tax. tax chori. That is not we are promoting. We are doing it that within the four corners of law, what provisions we can use so that the tax payable by our client is minimum. Okay, so a lot of interpretation is done. So if I say that no, this tax, due to this tax is not payable, but officer says no, you have to pay tax, then in that case I will be filing appeal against the that income tax department. Appeal means I don't agree with the department, so I'm not satisfied with this, with the order passed by the officer. So I go to the higher level authority, I complain. Like if you in your school, if you are not happy with that peon has done something and you are not happy, you will go to the teacher. If you are not happy with the teacher, you will go to the principal. You are not happy with the principal, you will go to the school management. So you will be generally complaining to higher level authorities. So those higher level authorities in income tax are Commissioner Appeals, ITAT, that is Income Tax Appellate Tribunal, then above that High Court and Supreme Court. So once the case goes into High Court and the High Court gives the decision and no further appeal is filed, both the parties means I as well as Income Tax Department agree with that, then that is final. Or if I don't agree, I go to the Supreme Court, then Supreme Court is final. So those case laws means the on different issues there are different judgments given by High Courts and Supreme Courts. So whatever are given in our institute study material, we are going to discuss them separately. So tomorrow what you have to do? Tomorrow you have to get a separate 100 pages small notebook. So there are around I think 150 case laws. So we are going to write down summary of that, because many a time students feel, how I'll remember the case laws. So we'll make a small notebook for that. So in maybe 20-30 pages or maybe 50 pages, all the case laws would be summarized. And once they are summarized, easily in your free time you can go through that. Got it? Yes. So that was all about body of income tax law. So what we are going to do, we are going to summarize everything. I am going to make you write a lot. Don't feel bored with that, because due to writing your understanding of that concept improves. So write down the chapter name, income tax basic concepts, and write down body of income tax law. Body of income tax law. So what are the different things which we are going to study? Let me clear this. Today it was like a different session itself, like we discussed something from constitution, then what happens in parliament, and also civics was also there. So 1 2 3 4 5 6 parts. And don't have the habit, okay, now this line is there, so I'll use a ruler to do that. In exam you don't get time to do all these things, so try to do it on your own with pen only. So Income Tax Act 1961, that we are going to study. Then income tax rules. But it's not going to be that okay, today we are studying only act, tomorrow we are studying all the notifications, then day after tomorrow only circulars. No. So for example, if PGBP is there, so maybe if it is relating to scientific research expense, so scientific research expense, what are the provisions in the act and rules simultaneously we'll study. If any notification is given on that issue, there and there itself we'll study. If any circular is given, immediately after that we'll study. So we are not going to do tax separate, rules separate, circular separate. No, we are going to do go concept wise. So let's write on income tax rules 1962, then Finance Act. Yes, now for May and November 2022 exam, I told you that you are not going to study the budget which is in February 2022. Then what you are going to study? We are going to study Finance Act 2021. So Finance Act 2021 is applicable from 14/21 to 31st March 22. But you will say that my exam is after this. My exam is in May 22. Still, this Finance Act is applicable. So this Finance Act 2021 we are going to study. Then notifications. Notifications are issued by central government and circulars are issued by CBDT. Notifications by central government, circulars by CBDT, and case laws. Case laws, there are thousands of case laws, but all of them we are not going to study. Whatever are given by the institute, we will be studying those. For case laws, what you are going to do? You are going to get a separate notebook so that we can summarize the case laws in that. And case studies. So these case laws are by the court, and case studies which are asked in exam are what? These are prepared by the institute. They'll prepare a case scenario like Mr. A earns this, Mrs. A earns this, his son earns this, his daughter earns this, 4 or 5 persons they are earning this. Then first MCQ would be what would be the total income of Mr. A. Then you have to do it in rough the calculation and select the correct option like that. That is case study, that is different, and case law is different. Next, now I told you that Finance Act 2021 is applicable. So which year, financial year is applicable for our exam? 14/21 to 31st March 22, which is previous year. You will say what is previous year? Now generally we know that if this is the current year, then previous year means year earlier than that. Okay, but in income tax, the year for which you are doing the calculation of income and tax is called as previous year. It's not the earlier year. So previous year means, actually here ideally the definition should be the year for which you are going to do the calculation. So we are going to do the calculation for PY 21/22. But when the calculation would be made, it would be made after the year end. So for that we are going to calculate in AY 22/23. So which year is applicable for exam? Okay, let me just check up once. Queries. Okay, there was one query. I'll just answer first this and then I'll take the query. Okay, fine. Yes, so now previous year 21/22 is applicable for our exam and AY 22/23. So ideally how the definition should have been that previous year is the year in which income is earned and assessment year is the year in which income is assessed, means the tax is calculated or income calculated on the basis of that tax is calculated. But they have not defined like that. So assessment year means 12 months commencing on 1st April every year. So every year 1st April that assessment year is there, and previous year means financial year immediately preceding the assessment year. So how to interpret? Now your exam is in May or November 2022. So if it is in May 22, then in that case, or November also, which year is going on? 22/23. Means it is from April 22 to March 23. So this assessment year is 22/23. Means during that period you are going to do the tax calculation. You can't do tax calculation for the ongoing period. It's not that like GST, you are filing returns every month. It's only once a year. So in 22/23, you will be doing tax calculation for which period? You will be doing for 21/22. Okay. So for your exam, financial previous year 21/22 and assessment year 22/23 would apply. So what is previous year? Year for which tax is calculated. and assessment year, year in which tax calculation for PY is done. Year in which tax calculation for PY is done. Okay, now we have a query. Anyways, if government don't want to collect tax, it might have merged both sections 10 and chapter 6A. No, it's not that. So once we do the calculation, see this. At this point, I'll explain that what is the difference between exemptions and chapter 6A deductions. So in case of chapter 6A deductions, only when you pay, that time only this deduction is available. So I'll explain you, don't worry about that. So I hope you have understood PY and AY. Now one financial year can be PY also and AY also. So how? If it is financial year 21-22, so April 21 to March 22, so it is PY 21-22, for which calculation would be done in 22-23, or for PY 2021 the calculation is done in 21-22. So every year can be PY and AY for different years, obviously. So for our exam, what is relevant? The income which is earned in PY 21-22 has to be calculated in 22-23. And which Finance Act is relevant? Finance Act 2021. If it is Finance Act 2022, then you should not study them. Then what about the amendments if there are? So don't worry. So you subscribe to our YouTube channel. Whatever is relevant for DT and IDT, I keep on updating there. So whatever your updates are there before exam, you can view there. But anyways, most of the changes are going to be discussed in class. But still, even if amendments are discussed in class, please spare some time and watch the YouTube videos, because there all the amendments would be clubbed together. Here what we are going to do, if there is some change in PGBP, we'll be doing it along with the other provisions. Then some change in income from other sources. Then some change in assessments. When we study the chapter, that time we are going to do the changes. In the YouTube video, what will happen? There will be a YouTube video where only the changes are discussed. So you will get that at one place all the changes. Plus I upload the free amendment notes also. So you can take a printout and keep with you, so that you can refer quickly, because questions are asked on amendments also. So going back here, yes. So which previous year is applicable for exam? 21-22. 21-22, which starts on 1st April 21 and ends on 31st March 22. If business or profession is newly set up or a source of income newly coming into existence, PY shall be from the date of setting up the business or profession, or when source of income newly comes into existence, and ending with FY. Now let's say the finance or previous year applicable is 21-22. In financial year 21-22, this person is earning salary, or Mr. A on salary, and from 1/7/21 he starts new business. Then what is the previous year applicable? For salary, he is earning salary from April. So for salary, previous year will be from 1/4/21 to 31st March 22. But for business, it is a newly set up business profession or a source of income newly coming into existence. So PY shall be from the date of setting up business profession and ending with the FY. So PY for that business income for PGBP would start from the date on which it is set up, 1/7/21 to 31st March 22. I think you will write down this part you write down. What difference it will make? In clubbing chapter we'll understand that what difference it will make, because in clubbing chapter we are going to check up the capital balance on the first day of PY. So for PGBP, first day of PY is 1st July and not 1st April, because that business has started on 1st July. Otherwise, in most of the cases, even if it is starting, there are a lot of incomes which I earn during the year. Like for example, interest for the first time I have earned on 1st December. So for interest, the previous year would be from 1st December to 31st March. It doesn't make any difference. Only in clubbing chapter, that date of that income coming into existence would be relevant. So you just write down that quickly. I hope it is done now. Okay, now on the next definition. Section 231, person. Now in exam no one is going to ask you define this. No, it will be always some interpretation based. So person includes, so who are the different persons? Individual. So you, me and all of us are individuals, so that is a person. HUF, that is Hindu undivided family. You will say that why religion is there in this income tax? Because as per Hindu law, the HUF is a separate legal entity. In income tax act, we don't have any gender related provisions, that is separate provisions for men and women. It's not there. Age related is there, like senior citizens, that we are going to study, but gender related is not there. Religion related also not given. But here Hindu undivided family is, what is this HUF? It is formed when two or more persons come together. So in taxation of means two or more family members, they can form HUF. So in taxation of entities we are going to study that what are the conditions, that how HUF can be formed, who should be the members, should that person be married to form HUF, and all in detail we are going to study. So persons following three religions, even if it is saying Hindu undivided family, it's not just restricted to Hindus, it is allowed to Hindus, Jains and Sikhs. So Jains means many Marwadi families are Jains. So in Marwadi businesses, if you have any clients who are running a business and who are Marwadis and who are Jains, they have a business in the name of HUF also. And Sikhs means in Punjab generally. So here Hindus, Jains and Sikhs. But I think that once the this uniform civil code comes, which says that all religions are equal, so whatever are the special provisions for Hindus, Muslims, Christians, those provisions, it's not the like I'm doing puja in temple, or a Muslim is going to mosque and doing his rituals, that won't affect. But the civil procedures will get affected by unified UCC. So once UCC comes, I think, I'm not sure, this HUF would be deleted, because again this HUF is only for some religion, only for three religions. But now if it is uniform, all the civil procedures are uniform, then maybe this provision won't be there. But for your exam, HUF concept is there. Then company, which means company. Firm means partnership firm, LLP, AOP, BOI, even if incorporated or not. So AOPBY, again in taxation of entities we are going to study in depth. So AOPBY means two or more persons coming together to earn income, like joint venture. So even if it is unincorporated, incorporated or unincorporated, still these provisions is a person, local authority and artificial juridical person. So any person other than this will be AJP. Now government is not specified here. Government is not specified in the definition of person. Therefore, government, we cannot recover tax from government. So state government, central government does not pay tax. Local authority, which is your municipality, gram panchayat, jilla parishad, it is specified in the definition of person. So it will be liable to pay tax, but in section 10, there is one exemption for that. Okay, so generally the tax is collected from whom? From us, individuals, HUF, company, firm, and AOPBY. E to G. E to G means AOPBY, local authority, and AJP shall be deemed to be person whether or not it was formed or established or incorporated with the object of deriving income, profits or gains. Government is not covered in the definition of person. So in case of AOPBY or local authority or artificial juridical person, even if that person is formed not for earning income. Now one example of artificial juridical person can be university. So university of any university, Bombay University, Pune University. So it is not individual, it's not HF, it's not company, firm, not AOPBY and local authority. So it will be university. So university is formed for what purpose? For giving education. Even if profit motive is not there, still profit can be earned. Like for example, in case of a charitable trust. So trust will fall under this AOPBY, because two or more people have come together for a common purpose of giving charity or making charity. So that's AOPBY. So their intention is not to earn profit, but for the purpose of charity, I require money. So my trust, like for example, my trust is into this rural education to poor children. To give education to poor children, I require money. So I do fundraising programs, or I do different activities from where I earn, the trust earns income. So that income is income of the trust, which would be taxed, subject to some exemptions which are there. But just because you can't say that no, there is no profit motive, so not taxable. No, if there is profit motive or not, still income tax has to be paid. Okay, I think, and this we missed out. Okay, then assessment year and previous year we did two concepts. So which assessment year is applicable for our exam? 22-23. And which previous year is applicable? 21-22 is applicable for our exam. Sometimes, okay, so what is the interpretation? The income earned during the period 1/4/21 to 31st March 22 will be assessed, will be computed in 22-23. Okay, but sometimes it is possible that this person is not paying tax. For example, in case of some AOP which is formed for specific purpose. So one association of person is formed only for specific purpose, and income tax officer thinks that this person is not going to pay tax. This AOP they will dissolve and they will run away. So in that case, AY and PY would be same. So see, PY is 21-22. So return for this, tax on this, or return for this has to be filed in AY 22-23. But in certain cases, income will be assessed in the previous year itself instead of assessment year. Means in this year itself, officer will say file the return. So what are the cases? Shipping business of non-residents. So in intra-state taxation part, we are going to study special provisions for this. So if I am a non-resident, I am not a resident of India, and I am running ship business, and ship comes to India, it earns income. What would be the income of the shipping company or that ship? It would be the transport charges, freight. So it earns freight in India, so on that tax has to be paid. But if that ship goes away, then how we will recover tax? So before the ship leaves, let's say the ship has come in the month of April 2022. Okay, or April 21, and it is going in May 22, but May 21 itself. So we don't know that in 22-23 it will file return. So the officer will tell that I will allow you to go. Income tax officer will tell that customs officer will allow you to go only after you file income tax return, you pay tax. So here that income is taxed in the previous year itself. Or assessment of person leaving India. You know, a lot of people they just run away from India. So there is a provision in section 74 that pay tax and then only on airport you will be given clearance. Otherwise clearance won't be obtained. Then AOP, BOI, AJP form for particular event or purpose. Then person likely to transfer property to avoid tax. So if the income tax department feels that this person won't pay tax and he will transfer his property, he'll sell his property and he'll run away. So from that person, tax can be collected in the previous year itself. And discontinued business, section 176. So if business is discontinued, then tax can be recovered with officer, and here the officer will do that. I won't do. Okay, I'm this person like leaving India, so I will pay tax on my own. No, your officer will tell, and then only this tax has to be paid. Okay, so write down this cases in which PY and AY are same. Cases in which PY and AY are same. First, shipping business of non-resident, or you can make 5 parts like this. Shipping business of non-resident. Second, person leaving India. Person leaving India. Third, AOP, BOI, AJP. AOP, BOI, AJP formed for particular purpose. Formed for particular purpose. Next, person likely to transfer property. Person likely to transfer property to avoid tax. Avoid tax. And if business is discontinued. Business is discontinued. Okay, one question is, what is the difference between firm and BOI? Unregistered firm can be called as BOI? No. So in taxation of entities we'll study. So here if the firm is unregistered, still it will be firm. It will be considered as a partnership firm only, because in many states in India registration is not compulsory. Of LLP is compulsory, but partnership firm is not compulsory. The state in which I live, that is Maharashtra, in that registration of partnership firm is compulsory. So even if it is unregistered, still it will be treated as partnership firm. But certain benefits which are given to that registered partnership firm won't be allowed to that firm. And BOI is 2 or more persons earning the income same. So in taxation of entities we'll do in-depth discussion. What is the exact AOP, what is the exact BOI? So body of individuals means 2 or more persons earning income jointly. 2 or more individuals. An association of person means 2 or more persons coming together with a common purpose, like a joint venture. Yes, next, assessee. So now a person becomes assessee only when he falls under these 4 criteria. So this is the first criteria, this is second, third and fourth. So assessment, I told you. What do you mean by assessment? It means calculating income, calculating tax. So the person for whom we are doing the calculation, or the person who does it for his own, is called as assessee. Now in GST, the word assessee is not defined, or in customs also it's not defined, but many times institute in its questions use the word assessee, fine. But in Income Tax Act it is defined. So who is a, and again yes, important, the spelling. So students make a lot of variations of this spelling. So assessee, so A double S single E double S double E. So here we have only 3 alphabets, A, S and E. So A1s, that is fine. They'll do lot of variations of S and E. So SE that you remember. Then 2122. 2122. Anyways, in your exam, you can go through the paper, and somewhere in the paper it will the correct spelling will be given. So if in exam you feel, I am writing the correct spelling or not, so you can find it in the question paper itself. But how to remember? 2122. SSE A, anyways 1 it is there, S 2 times, E 1 time, S 2 times, and E 2 times. So SSC means the person. Assessment year. See, assessment means what? Calculation of tax. So the year in which assessment is done is called as assessment year. The person for whom we are doing is called as assessee, and the officer who does that is called as assessing officer. We are going to call him AO. The person who is going to calculate. Later on, the officer can do my scrutiny. He will ask for some documents, he will calculate my income, he'll check whether the income which I have shown in the income tax return and the actual income, or as per his calculation, are same or not, whether I've understated my income, whether I've shown lesser income. So that officer who is going to do my calculation later on is called as assessing officer. So who is assessee? Section 27 means person by whom income tax or any other sum of money is payable. So if any sum of money is payable by me, then I am assessee, including a person for whom any proceeding under the act has been taken for assessment or a loss or of refund due to him. Means assessment of income, loss, or refund. So if some sum of money is payable by me, his income tax is payable by me, then I am assessee. If income tax is not payable but penalty is payable, then also I am assessee. Then tax payable in that year is nil, but for earlier year some assessment is going on, some loss is there. So loss, in case of loss I am not paying tax, but I am carrying it forward. Or in case of refund I am getting tax back, this tax is not payable by me, still I am an assessee. Or person who is assessable in respect of income or loss of another person. So for example, if I have transferred some money to other person, means I have given a gift and that person earns income, so there is a concept called as clubbing in income tax act. So clubbing means that person's income is taxed in my hands. So maybe I am earning zero income, but 10 lakhs earned by other person is taxed in my hands. See, 10 lakhs income is not received by me, but due to clubbing provisions it is taxable in my hands. So in that case I am liable to pay tax on that, so I'll become an assessee. I can't say that no, I'm not having any income. I'll show my passbook shows zero credits, no incomes, but some other person's income is taxable in my hands as per the provisions of clubbing, so I will be considered as assessee. Then person who is deemed to be assessee, that is representative assessee, will be studying later, or assessee in default. Assessee in default means if I don't comply with some provisions, like I'm required to deduct tax, TDS, but I don't do that, then I have not done the procedure properly, then I will be considered as assessee in default. So who is assessee? 4 criteria. Person by whom money, any sum of money or tax is payable to department or receivable from department, that is refund, or any proceeding is going on of income or loss. If there is loss also in that particular year, if there is only loss, still I am an assessee. In case of loss, I don't pay tax, I don't claim refund, assuming that there is no advance tax, nothing extra, no tax paid. In case of loss, I'll be carrying it forward to the next year. So I hope you are aware of this concept called as carry forward of loss. So in a year, if I incur a loss of 12 lakhs, that year I'll be paying tax 0. Business income or total income would be 0, and that 12 lakhs which is expense over the income, I have incurred more expenses, that will be carried forward to the next period, next year, and in next year it will be set off. That time also I am an assessee. So write down assessee. 6 criteria will write down. Person by whom income tax or any other sum of money payable. Then refund due. In proceeding for loss or income is going on. Then assessable. Assessable means he is liable to pay tax on behalf of other person. Clubbing. Then deemed to be SSE. Example, representative SSE. Like in case of minor, the guardians will be deemed to be SSE, or in case of person who is mentally unsound or incapacitated, then in that case his guardian would be deemed to be SSE. So in liability in special cases chapter we will be studying that. And then last one is SSE in default. So no tax is payable, but I have made some default like TDS related, still I'll be considered as SSE. In exam, are we required to are we asked question like this, define SSE? No, but maybe 1 mark MCQ can be there, that Mr. A is not liable to pay any tax, there is no refund due, there is no loss, but he has not complied with TDS compliances, and because of that he has to pay penalty. So in that case, whether he will be considered SSE? The answer is yes. Okay, now the tax rates. Now we have studied different types of persons. Now tax rates for them, individuals. Now individuals, 3 criteria or 3 types of classifications have been made. Resident below 60 years. Now which financial year or which previous year is applicable for our exam? 1/4/2021 to 31st March 22. So resident below 60 years. So this person should be, if he is 60 or above, then he becomes a senior citizen. And if he is 80 or above, then he becomes super senior citizen or very senior citizen. Anything you can use, but we'll just use the word super senior citizen. So he should be 60 years complete, 80 years complete when? He should be complete during the year. Means if he is 60 years complete on 1/4/21 or on 31st March 22, still he will be getting, like, if he, let's say there are 365 days in a year, so 360 days he was 59 years old, and on 361st day he becomes 60 years old. So the basic exemption limit will change. Will it be taken proportionate for 360 days 2,50,000 and proportionate, and for balance 5 days 3 lakhs and proportionate? No. So even if he is less than or more 60 years or more, still he'll be considered as senior citizen. What if his birthday is on 1st April? Now if your birthday is on 1st April or any date, for example, if it is on 2nd July, for example, then when you will say, okay, and now let's say you are 21 years old and you will become 22 years old. So on 2nd July, you become 22 years old and 23 running. So for income tax, the running age is not relevant. How many years are complete, that would be relevant. Okay, so on what day you become 22 years complete? On 2nd July. But here in income tax, there is something weird. Circular number 28 2016. Person, this is only for persons who are born on 1st April. Persons born on 1st April would be considered to have attained such age on 31st March. So generally, if my birthday is on 1st April and I am 60 years old on 1st April, let's say 22, then I'll be deemed to be generally, I am 60 years complete on 1st April only. But for income tax, I'll be 60 years complete on 31st March. You will say what difference it makes. It makes difference relating to the slab limits, or whether that person is a senior citizen, super senior citizen, or a normal resident. So now see this. If date of birth is 2/4, or first we'll check up for senior citizen. So if my date of birth is 2/4/42 to 1/4/62. So if my birth date is 1/4/62 plus 60 years. So 1962 plus 60. Let me calculate. No calculator, I'll use the mobile. 1962 plus 60. So that is 1/4/22. Okay, 1/4/2022. And it is deemed that I become 60 years complete one day before, that is 31st March 22. So here for our exam, which previous year is applicable? 21-22. So this person is 60 years complete during the year, therefore he will be considered as senior citizen. And super senior citizen means 80 years complete. So 1/4/62 plus 80 years, or 1 plus, now you have to go 20 years back. 1/4/42 plus 80 years, it would be 1/4. So 1/4/42 plus 80 years. I'll just do that once. So 1/4/22. So he'll be deemed to be 80 years complete one day before, that is 31st March 22. Okay, so if the date of birth is 1/4/42 or earlier, then he'll be considered as very or super senior citizen only if he is a resident. Now residential status we have not done, we'll be doing when we start the international taxation part. There are three categories of residents: ROR, that is resident and ordinarily resident; RNOR, which is resident but not ordinarily resident; and NR, that is non-resident. So if he is resident, either ROR or RNOR, and his age is 80 or above, then in that case he will be getting a basic exemption limit of 5 lakhs. Then income above 5 lakhs, 5 lakhs to 10 lakhs, 20%, and above that 30%. Now are you required to remember these dates? No. So see this, senior citizen, resident, 60 years or above, date of birth 2/4/42. Why 2/4/42? Because if it is 1/4/42 or earlier, then he is a super senior citizen. So 2/4/42 to 1/4/62, he will be considered a senior citizen, and 2/4/62 or latter date, if he is resident or non-resident, no age limit, the first limit will apply. Now many times in exam, to confuse you, they will give non-resident whose age is 85 years has earned this much income. So that non-resident won't be considered as a super senior citizen nor a senior citizen, because who is a senior citizen or a very super senior citizen? Senior citizen, resident who is 60 years or more, and super senior citizen, resident who is 80 years or more. If he is a non-resident, then he would be considered as general person. So nil. So resident that first 2,50,000 exempt, 5 lakhs, 2,50,000 to 5 lakhs, it would be 5%. Then 5 lakhs to 10 lakhs, 20%, and above that 30%. And for senior citizens, up to 3 lakhs, nil, 3 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%, and above that 30%. Then same rates will apply for HUF, AOP, BOI, AJP, private trust, political party, even charitable trust also. So up to 2,50,000. Now for these persons, age is not relevant. There is no senior citizen trust or super senior citizen trust. You can't say no, that trust is formed 100 years back. So give this 5 lakh rupees exemption. That is not allowed. So up to 2,50,000 nil, 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, and above that 30%. So now we'll do some analysis. So for age up to 60, 60 to 80, obviously if it is exactly 60, then super senior citizen, or sorry, senior citizen, and exactly 80, then very senior citizen. So how much is the tax? Tax up to 10 lakhs. Now for up to 60, up to 1 lakh, 2,50,000 nil tax. Okay, then 2,50,000 1 to 5 lakhs. So don't calculate 2,50,000, sorry, 5 lakhs minus 2,50,000 1. So in that slab it is 2,50,000. So 2,50,000 to 5 lakhs is 2,50,000 and 5% of that. So 5% of 5 lakhs minus 2.5 lakhs plus 20% of 5 lakhs to 10 lakhs. So again 5 lakhs in this. So 2,50,000 into 5% is 12,500 plus 1 lakh. 5 lakhs into 20%. So 1 lakh 12,500. Then if it is 60 to 80 for resident, then if the income is 10 lakhs or tax up to 10 lakhs, so income is how much? First 3 lakhs exempt, then 3 lakhs to 5 lakhs 5%, and 20% of 10 lakhs minus 5 lakhs. So calculate, so keep your calculator with you. So 2 lakhs into 5% is 10,000, and 20% of 10 lakhs minus 5 lakhs is 1 lakh. One lakh 10,000. And if it is above 80, then up to 5 lakhs nil tax. Then this 5% won't come, because 5% is up to 5 lakhs. But anyways, for senior, very senior citizen or super senior citizen, anyways the entire tax is up to 5 lakhs is exempt. So only 20% of 5 lakhs to 10 lakhs. That is 1 lakh. That is rupees 1 lakh. Okay, so here we are going to, how we are going to do, many times in tax calculation they'll ask, okay, income, or we'll calculate the income 15 lakhs. So quickly how we are going to do, anyways if the age is up to 60, then up to 10 lakhs tax is 1,12,500, and how much is above 10 lakhs? See, total is 15 lakhs. So up to 10 lakhs and 5 lakhs. So 5 lakhs into 30% we can calculate, and this we already calculated 1,12,500. So for up to 60 years, tax up to 10 lakhs is 1,12,500, 60 to 80, 1,10,000, and for super senior citizen it is 1 lakh. So that tax calculation becomes easier. Then after this, we have rebate under section 87A. So rebate means reduction from tax. So it is applicable only for resident individual. It's not for all. Only for resident individual. If the taxable income is up to 5 lakhs, then deduction of from tax lower of 100% of tax or 12,500. So that would be the deduction. So see, for resident individual, if my income is 3 lakhs or my income is 5 lakhs, and third possibility 6 lakhs. So how much is the tax? It would be, for first case, 50,000 into up to 2,50,000 is exempt. So 50,000 into 5%, that is 2,500. Then here 12,500 and 6 lakhs. So out of 6 lakhs, first 2,50,000 exempt, then 2,50,000 to 5 lakhs, 5%, which is 12,500, and 5 lakhs to 6 lakhs, that is 1 lakh. I hope you are understanding it. So 6 lakhs means, in this case, up to 2,50,000 nil, then 2,50,000 to 5 lakhs, 5%, and 5 lakhs to 6 lakhs, that 1 lakh into 20%. So in this case, 1 lakh into 20% plus, that is 2,000. 1 lakh into 20%, 20, okay, plus 12,500, that is 32,500. 32,500. Now here rebate under section 87A will be allowed only in first two cases, where net taxable income is up to 5 lakhs. So first case, how much rebate would be allowed? Lower of 100% of tax or 12,500. So 100% of tax means 2,500. So 2,500 or 12,500, whichever lower, that is 2,500. Second case, 12,500, and third case nil. It's not that rebate would be allowed. So you are 0, 0, 0, 3,000, 32,500. 32,500. And to this, we are going to add HEC, Health and Education Cess. Now cess is collected for specific purpose, and income tax. So when I pay tax, I don't know for what purpose it will be utilized. It can be utilized for some infrastructure work or other activities, but cess, whatever cess I am paying, that will be for use for health and education. So that cess would be payable of the balance. So it would be 32,500 into 4 divided by 100, that is 1,300. So total tax payable 0, 0, 33,800. In last case, 33,800. Then for partnership firm LLP, straight away 30%, local authority 30%, and foreign company 40%. Then for domestic company, total turnover. Now which financial year? Okay, just 1 minute. There is some noise, just wait. Yeah, fine. Yes, for our exam, which financial year or which previous year is applicable? Previous year 21-22. So for companies you have to check turnover of 2 years prior. So for 2 years prior means 1920. So if the turnover of the company or gross receipts means the turnover sales does not exceed 400 crores, then 25% would be the rate. And if it exceeds 400 crores, then 30% would be the rate. Plus there is 115 BA and all different complex provisions for domestic companies, which we will be studying in a separate chapter. So right now what you remember, if the turnover of the company is up to 400 crores 2 years back, which means in 1920, then tax rate for this year is 25%. And if it is more than 400 crores for 1920, then tax rate for this year, that is for 21-22, it is 30%. Then cooperative society up to 10,000, 10% tax. There is no slab limit, means there is no exemption limit. 10,000 to 20,000, 20%, and above 20,000, 30%. But for cooperative societies, we have deduction under section ATP. So as per section ATP, most of the incomes of cooperative society is deductible. Got it? So this was the basic discussion on the tax rates. Understood this? Now we'll take break, and after the break we'll continue.